All right. So, welcome to this edition of She Talks Business. I feel a little bit vulnerable, to be honest, you guys, because I have my very own accountant, Steve Parker, here as a member or as part of our advisor series. And I'm super excited to dive into this conversation today with Steve. I have to tell you, Steve was referred to me by another client of mine who has worked with him for years. And I have been in business since 2006, and I have to say, Steve is the best damned accountant I have ever worked with. And he is probably one of the only accountants that responds to the emails that I send him within 24 hours every single time. Steve, welcome to the show.
Lisa, thank you for nice comments. Yeah, it's a funny industry that way. Lack of responsiveness from accountants is not a great trait we see across the board. So when I started my business 28 years ago, I made it a simple promise that clients will always be able to reach me and get answers to questions. That's not a very hard thing to really deal with. Just being responsive is an easy way to separate yourself from others. So
I couldn't agree more. I always say responsiveness is a competitive advantage. And in a lot of cases, it actually helps you close sales faster because if you respond before everybody else does, you have a leg up on them. And a lot of times, especially in today's society, people want to make decisions and they want to move forward now. And when it takes a long time for somebody to respond, often the decision has been made by the time they respond. So it's one of the things that I really value in the relationship that you and I have. I know that if I need something, I'm going to hear back from you. And I think that's an important attribute for a business owner to have in the relationship that they have with their accountant. I know a lot of people who complain about accountants who go dark on them. And I understand there are certain times of the year when it's a lot busier for your accountant where maybe the responsiveness isn't going to be as great. But if you can't get your accountant to respond to you on a timely basis, you're probably not working with the right firm.
yeah, I would agree. And I don't follow the path of, when we're extremely busy, that client responses are delayed. We're a service provider and our role is to provide answers to questions and advice. And when we're busy, we just have to work a few extra hours every day to get it done. That's how you commit to it. So we don't change our response time when we're busy beyond maybe an hour or two. It should have to consolidate some replies to later in the day or in the evening, but doesn't get dropped. Yes, one of the drawbacks of the accounting profession, and it's not something that we create, is in Canada and the US, and even most Canada and the US are the two worst for this, but having tight deadlines around tax filing. So yes, there is a compressed work period that accountants deal with. And that can certainly, obviously, in all honesty, make it difficult to be responsive. You have to commit extra to it. So it is an industry problem. And it's most industries don't actually face. I always say to my clients, the odd time where something doesn't get done the way they want in peak season, we try to do our very best. Well, imagine a medical practice seeing all their patients in 6 weeks of the year.
Right.
But we one of my roles was to make sure we did it differently. So going dark never occurs in our case. And yeah, we might have an hour or two extra delay in peak season replying, or, we may have to defer some large things to another day, but it's still very responsive. But it is I'm not going to deny it's not a
for sure.
The key issues there, Lisa, when you're selecting an accountant, and I think a lot of small business owners and small entrepreneurs have the idea that I want an accountant who's going to be a small practitioner because they'll give me more attention. And quite often the opposite happens, in that you want to find the sweet spot where the accounting firm is small enough for your situation. Again, looking at the size of the firm, like your business size, but you don't really want somebody who's on their own, because then they're doing everything. So a good structure has the key accountant, in my case, myself, in my client's case, available to primarily answer questions, review and approve work, but not execute actual detailed work.
Right.
Where your firm has to be well staffed. So understaffed accountants struggle with the issue of responsiveness, and actually giving value added. So they're tied up too much in small, less challenging areas of the practice.
Mm-hmm.
You want to look for a firm that is well staffed but still has a hands-on partner level, which is not always that common.
That makes a lot of sense because I've done both. I've worked with the accountant who is the one who's actually doing all the work that I can't get a hold of and I have to chase and chase and chase and chase. And then I've worked with a really, really, really big firm where the person who is making the promises can't fulfill them because they're so far removed from the work that's being done that it just gets lost in translation. So I think that's a really valid point, that you need to find the right sweet spot. And if you're listening to this and you're in startup mode and maybe you're working with an accountant right now that is a solo practitioner, that might serve you well for the first year or so of your business. But I think there are times in your business where you're just going to know that the provider you have is not necessarily the right provider, and you need to step it up a level to get somebody who's a little bit more attentive and skilled.
Yeah, and it has more exposure to higher end things, because if they're spending most of their day doing routine accounting work for you, they're missing the exposure. And how you do that is through proper staffing and supervision.
Right.
And that's the model I developed from day one. I had an employee when I started my practice. Before I had any clients, I had an employee. I'm not going to be an accountant who sits at my desk doing routine accounting work for my skill level. And I incurred extra costs my first few years to run it that way, but it's paid off. And that way I'm to my clients on high-end things all the time. And we, of course, we review work, we approve work, and we plan work better that way. And I would say the more time, your accountant being the key person you deal with spends actually doing detailed bookkeeping because accounting work for you, probably the less success you'll have in that role. So This is a bookkeeper type situation. We're trying to get away from that type of talk. What does an accountant really mean to you? Bookkeeping is an accountant role that may be done by some of their staff. And that's a lot of the problems small entrepreneurs face, is finding that sweet spot between too big of a firm, which has that structure, but doesn't pay attention to you, or their hands are tied at partner level because they can't really decide anything. And then too small, where the actual partner is too much involved in routine things, if it doesn't have time to answer your questions.
Can you give us an example of the size of your firm? How many accountants do you have on your team? How many bookkeepers do you have on your team? So that when people are shopping for a firm, they have an idea of what should that size look like?
Well, in most of the major markets in North America, there is a sweet spot of firms who are local firms. They would have usually between 10 and 50 employees in that kind of sweet spot. And how many partners they have depends on how large the practice is. But they're large enough to allow the key person, the partner, to be available to do things for you that are not routine and to be responsive. And yet they're small enough to still be responsive in that they're not dealing with large clients. And most of the cities in North America would have firms that size. The question in the middle is how good of a strong of a firm they are overall. Right. The larger the firm is, the more structure there is to getting things through their office, the more time partners spend in national partner meetings and all kinds of non-client function areas. My practice, I started a bit differently. I worked for a national firm, and I saw how much time was spent not actually servicing clients. And so I thought, well, if I just turn the model around, there was two problems I saw in an accounting firm. This is the business side, was they allowed their staff to turn over. So they very little effort into staff retention, and actually accepted a high turnover ratio. And then the partner, who is the most technically knowledgeable in most cases, not always, but in most cases they were, and had the most client knowledge, was probably the least involved in the actual work flow. And so I just said, okay, I'm not going to play golf and go to marketing function. I'm not going to go to national partner meetings. There's nothing wrong with those things, but I couldn't serve my clients that way. and then staffing the firm well, and then retaining
Mhm.
was a key issue. So all those things came into play. And not all accountants by nature, unfortunately, are not the best entrepreneurs. And that's just a reality I will tell you over and over again. Accounting and entrepreneurship don't usually go hand in hand. So quite often these things are missed, and the same as last year approach is used, where accounting firms run themselves the same way over and over.
Mhm.
Turnover, it's a very portable skill industry, so you have to fight staff turnover very, very.
Mhm. Well, it's a gig economy too. Everybody wants to hang their own shield up and do their own thing, right?
Firstly, in our industry, there's not as much of that. That's one of the things you're finding across the industry now is a shortage, because a shortage of external accountants, the people like
Mhm.
myself, because young ones won't hang a shingle. They're too impatient with developing the skills and the investment effort. Apologize, my phone keeps going off here.
That's
Sorry.
okay.
I'm gonna put
S- No worries. So when there's a few things that I'd like to talk to you about, just kind of related to how we entrepreneurs really work with our accountants as advisors. And so I communicate with you fairly regularly. Um, what is an ideal situation in terms of how frequently should business owners be communicating with their accountant? I
well,
know I see patterns where people wait until it's tax season, and then you hear the horror stories of the shoebox, and they're trying to cram everything in at the very last minute. In an ideal situation, how should an entrepreneur or business owner work in partnership with their accountant as their advisor?
Well, to get the most value out of that role, which means the best advice, and hopefully at the lower cost structure side of the advice, is and when I start with new clients, I start this way. I try to make sure that they develop some kind of internal accounting function that's reasonable. Okay. Generally speaking, you don't want your accounting firm becoming your bookkeeping firm, outside of rare exceptions, or if they fire that service, it's separated service. So it's not really part of that key engagement. They may provide that service, but that's not really what you want from the accounting firm. You want the higher end work beside. So making sure you're getting things done to a reasonable level during your fiscal year. What I tell my clients when I meet with them, new clients, is you always contact me whenever you're going to make a major financial decision, or you have a question about anything. So again, what does that really mean in the end? Well, questions will always come into your head. You'll contact me. Major decisions, don't let us be the last person to know what you've done when it's a major decision, because we may have things we want to intercept there. I let my clients decide what's major to them. It may trigger a few more inquiries than I may otherwise get, but we intercept things before problems occur quite often. So if you make sure and then you have to act on by replying. So I intercept more things to prevent more problems by having it that way. So
Mhm.
client's going to buy a new insurance policy, run it past us first. So we don't tell you after the fact that you probably should not have purchased this, given all things being equal, right? There's too much nonsense in the financial world out there. And not all accountants are well versed in interpreting financial products, for example. That's where exposure comes into play. If your accountant, again, is sitting at their desk doing your bookkeeping, they're not going to get exposure to what's out in the business world, and
Right.
cannot intercept a lot of these things. So I try to be more of a high end person that way. Obviously, most accountants provide once a year annual tax work. The tax planning side is an important area to try to be proactive in. Tax planning is proactive and reactive. Well, everybody wants proactive work. Well, you don't have the results. Okay, until you can tell me what your year is going to look like, which you don't even know, we can't tax plan everything now. We can
Right.
some structures and some approaches, but we need some tax planning. Good tax planning is proactive in having the right structure and having some things done if we know there's some certainty that will occur, and then very reactive close to year end. So close to year end might be before year end or a little bit after. Most of the taxing in Canada and the US allow year end things to be done to optimize tax planning. So Clients who leave things obviously very late to the deadline process leave little time for react.
Right.
I think there's always some scope. Um, so again, year end is not the only time that we have contact with clients. Of course, accountants, like you mentioned, it's hard to get hold of some of them, and they're busy and they're not responsive. So in the middle of that, you're thinking, well, what can I do? Again, find somebody who will respond to you. If they won't, try and find somebody else who's strong in the area. My clients, again, I try to leave it to, I'm always here for your questions. I'm always here for anything that gets brought to you business wise you want to talk about. I would like you to run major things past me before you do them. If it's a non-issue, it'll be a non-issue conversation. There's nothing here for us to consider. If it's a big issue, we will intercept problems for you. Not all accountants can feel strong enough in those areas to talk about financial products, insurance products. Tax planning obviously is paramount. One thing I would caution on in tax planning is not all accountants are good at tax planning. The assumption is that because somebody's an accountant, they are tax trained. Okay, and that is a falsity, unfortunately. The way in Canada and the US is probably very similar. The large accounting firms dominate the student training process, and the majority of their work is in the audit sector for their students. So in Canada, for example, the students' requirements to work in the tax area are very, very minor in getting their professional designation. Yes, they cover off tax courses in school. So tax planning, which is a dominant issue for entrepreneurs, has got to be nailed down, and make sure who you're dealing with understands tax optimization.
Yeah.
It is number one or number two cost for a successful entrepreneur in operating a business model. There's tax compliance, there's tax planning. I can tell you how many awful situations I see from people who've hired because the person said they were an accountant.
Well, simple thing. I remember when we first started working with you, you said to me, "Oh, it's interesting how the last firm filed your taxes last year. We could make one adjustment on this and you'd probably get a $10,000 refund. And it would probably cost you about $1,000 for our time to do the adjustment for you. Do you want us to do that?" And you did, and we got the money back. And so it's like having somebody that can actually look at your tax returns and make decisions like that is so important for business owners because we don't know how to do that stuff.
No, exactly. And you assume, I mean, people assume that they're an accountant, so they'll be well versed in tax optimization, and are, but many are not. By the training they receive, the dominant number of graduates in the accounting profession do not receive much practical training in the tax area. And then in itself, it's a specialization area on top of that. So the connection that I have an accountant means I have tax planning is a false assumption in many cases. So and you're right, how do you know I'm not being properly handled? Well, again, references are a massive source here. Get people who are strong. Look to experience. Don't look to cost as the dominant choice in an account. I can't tell you, I just picked up a client this past couple of weeks ago. Their previous accountant, who's a bookkeeping service, cost them $250,000. There's no fee savings there going on. Okay, not to mention how many headaches that are caused by that. So, buyer beware in this marketplace. There are an awful lot of people also who the accounting profession is regulated, but that's regulation for people who are designated. It's a marketplace full of non-designated people who have no regulation over them. And so in that regard, we're competing against, in theory, the H&R Blocks of the world who call themselves tax experts. And nobody can stop them from calling themselves a tax expert. And so there's an awful lot of people out there who aren't very well qualified.
Right, but they say they are. It's no different than the coaching business.
Positive advertising about it. And just buyer beware. I always tell clients when you cut costs on tax work, you run an awful lot of risk on it costing you a lot of money. On the flip side, there can be the opposite side of the equation. People will say, well, I'll hire a big reputable firm only. The problem there can be, one, you're a very, very, very small fish in their world. So you're not going to get much attention or much risk-taking attention being on top. Secondly, you will pay astronomical fees to get those results. And so we do have clients coming to us who are spending 3 to 4 times the price for lower quality work in some cases because they're dealing with the wrong supplier.
Right.
Sorry, go ahead, Lisa.
Can you talk a little bit about separating bookkeeping from accounting? Because I think a lot of times people are looking for a one-stop shop, and you don't really provide a one-stop shop. You will provide a stopgap, but we've brought all of our bookkeeping in-house, and we've worked with, people on your team to help us learn how to do the bookkeeping the right way. Do you recommend that most business owners have a bookkeeper that is not their accountant? And if so, what do they need to do to ensure that the way the bookkeeping is being done is done so that the accountant can work with it the right way?
Well, again, from a business standpoint, I can tell you that any qualified, strong, successful accounting firm does not have any real interest in bookkeeping work. And it's a pure business model issue. The profit margin is not there. And there's too much interaction back and forth on a daily, weekly basis for low profit margin. It's not our model.
Right.
It's sort of like a doctor's office also doing an awful lot of routine things that are part of your daily life, making sure you eat well that day and you do this and you do that. That's not really their role. Some accounting firms do it. It's not an area I'm a business, I'm an entrepreneur. We don't make any money on bookkeeping worth talking about. So why bother with it? It's not the area that we have any interest. It's not our skill. Right. But there's a problem in the marketplace in this area for entrepreneurs. We know that. So we will provide stopgap measures in some cases. So how do you find a qualified person for your business model? And that can be a problem. I'm not going to deny that. It's an area where the skills are all over the map. It's an area we have a lot of problems finding qualified people for our clients. And you as an entrepreneur, when you start a business, have to make sure this area is covered off. One thing I caution you on is try to buy bookkeeping services from a bookkeeping firm. And if the accounting firm is offering both, be careful, again, that they're going to want, if they have that desire to do work at that level, how will their high-end work be? And so
as an accountant, though, do you flag when the bookkeeping is not being done right?
Of course, we will caution our when there's problems without question. But I'm not saying the solution's always easy, because a market to find, good people in, and it's just the reality of the marketplace. It's one of the drawbacks of entrepreneurship. All the wonderful things you have, one of the drawbacks can be finding good skills in these areas that are reliable in an area that unfortunately you have to deal with. And that's where we provide stopgap measures for clients who are really caught. We have outside people we refer to with a level of caution, that they're a bookkeeper, they're not going to read quite often. Strong bookkeeping is difficult in some areas to find. So
it's been great for me to have the right structure in place and to have someone on my immediate team who can do it. And then who also has a lifeline. She can reach out to you guys if we have a question or a problem.
Be the lifeline more than the execution source. And if you can train your own people how to do it, they are, fairly user-friendly, easy software program. The key point there is to create a systematic process. Reach out for the lifeline, reach out for the training, try and find somebody internally or externally who you're comfortable with, let your accounting firm evaluate. But it is a struggling area. I'm not denying that. It's a problematic area. There are accounting firms who will provide both services. There are bookkeeping firms who try to provide both. The cautionary point more is letting the bookkeeping firm become your external accounting firm, when they will offer to do your corporate tax work and your tax planning, and they really don't have those skills. The accounting firm does bookkeeping work. Some of them do set up separate divisions, which again, they're lower profit margin for them, but they're just part of their business model. It's something that I'm perfectly honest about it. I'm a too busy guy to want to get into that kind of monitoring 25 bookkeepers in my
Yeah.
practice. Most accountants feel that way. Most
Mhm.
most have too much good work, higher profit margin work. So that's the problem. You're into a sector where the profitability, you're into a $40 to $50 an hour sector versus the hourly rates of $100 plus in professional accounting services. So that your accountant should always comment on the bookkeeping problems you're having and try to find, we usually have some referral sources that are at least palatable to the situation. They're not always, it's a hard area to impress. We find the odd one who's really strong and they're always full. They all,
Mhm. Right.
I always recommend the clients when they're starting a business model, and they can't get any access in that area, is go to their community college in their local area, look for some high-end accounting students at the end, because there are people who it's golden work for them at that stage in their,
Right.
it's pretty easy work for them. This is not difficult work for a qualified person. It's the problem
Mhm.
is people in the bookkeeping sector aren't really qualified who then sell that service.
Right.
But it is, you can see what it is. It's an area that's repetitive in nature. It's a decent way to make a living, not denying that, but higher skilled people want to stay away from it. But we recognize it has to get done. So how do we satisfy clients who are, if they're caught, we will look after them.
Yeah.
Uh, Short term, sometimes in the medium term, which is not something we try to sell a lot of. But yeah, I know it's a problem area for it. But it has to get looked after. We're talking about a problem,
Yeah.
but it has to be looked after. So as an entrepreneur, find somebody and make sure they're vetted for being reasonable quality for you uh,
Mhm.
for the period of time. And don't cut corners too much on costs. Again, focusing on low cost quite often does not
Right.
produce a great result. Get
And I
ref.
think the other thing that I would say when you are working with a bookkeeper, know what you want and when you want it by. So I'm very clear about when I want my bookkeeping completed by for the previous month and when I want my reports by. And I look at that stuff on a monthly basis. Too often, I think entrepreneurs don't actually set expectations around what they want and need, or they don't provide the bookkeeper with the information they need to be able to do a good job. So if you want your accountant to be your advisor, step one is find a good bookkeeper and make sure that they have what they need to be able to do their work on a monthly basis.
Want to set
So I,
parameters for this, and you want data to run your business, and data should be timely.
yes.
So many entrepreneurs run their business based on being, if I'm busy, I must be making money. And that's
Yeah.
not a successful way to run a business. So it's housekeeping, but it's important housekeeping. It has to get,
Mhm.
and if you, as your business gets more complex, you'll need more of this kind of data to run your business. So you should
Mhm.
not tolerate data that's not timely unless you're the problem. In that case, you got to solve.
Right.
So yeah, a good business person will always have profitability, revenue data, expense data, balance sheet data
Mhm.
available on a monthly basis. Doesn't mean
Mhm.
everybody needs that to run their business. There are some businesses that are very simple and routine, and you can tell things based on daily sales levels. Your costs are fixed, and your business model will dictate that. But you have to know that. How
Yeah.
often you need data in your business. In my business, I know my business extremely well. I know what my overhead costs are per month, so I can judge my model based on my revenue per month. My accounting person does not reveal anything to me I don't already know. But
Mhm.
I watch my bank account 5 times a day. Okay, I know my business really well, right? So I'm different that way. If you're an entrepreneur who really knows your business model, knows your overhead cost structure, knows your profitability margins, so revenue might drive the result,
Cash flow.
catch all those factors, you may not rely on the accounting data as much, but very few entrepreneurs fall in that category. It's just not
Yeah.
a skill set that most people have when they're running their own business. It's, you got to be
Mhm.
honest with yourself. And so you have to outsource those areas, and you don't want to run a business without any
Mhm.
data.
Yeah. So I have two more questions for you. The first is, what are some of the questions that business owners should be asking their accountant that they don't ask?
Good question. Business owners should be asking their accountant that they don't ask, eh? So you're coming from a business owner standpoint.
Right. So, what are the questions that people should be asking you that they're not asking you when it comes to their accounting? Like, if you're their advisor, as you're their accountant and you're advising them on the financial side of their business, what questions should they be asking that they don't even know to ask?
Well, and I focus on three major areas with my clients, and I'm not talking about the bookkeeping side. You've told me
Yeah.
what your year looks like. I focus with clients on them understanding their profitability model. I mean, what do I mean by that? I mean, if they want to be more profitable, what levers do they have to pull on? And usually it's not cost, it's the other side of the model. It's revenue driven levers. So I mean, businesses, your whole reason for being in business primarily, let's call it what it is, to make money. I mean,
Hmm.
other angles, we all know as an entrepreneur, there are many other things we get out of it, but we wouldn't be in business whether from a profitability goal standpoint. And an accountant doesn't really tell you, how to make money in your business per se, outside of their own experience, but they should at least be talking to you when things are not going well, commentary on that side. It's a tougher one. I talk to my clients a lot about their growth models when they're in that mode. Some are not. Some are simply repetitive business models. There's not a lot of that going on. But
Hmm.
as an entrepreneur, I focus heavily on growing my own business. I'm a different account. I'm also an entrepreneur myself. So I started my firm from scratch, and I built it up, and I want to grow it every year. So I focus with clients on commentary on their growth when there is necessity for that. Obviously, the client talking, this should be an obvious one you would think, but tax optimization. When
Hmm.
you're profitable, then it comes down to, am I executing every reasonable, defendable angle on tax reduction, tax deferral strategies? This is an area that you'll get a variety, a myriad of commentary on, depending on how passive the accountant is, how knowledgeable they are. All right, tax is not black and white. There's a lot of gray in tax. There's an awful lot of options.
Hmm.
Large accounting firms do wonderful jobs in reducing worldwide tax obligations for Fortune 500 companies to massive levels. Smaller clients tend to get underserviced in this area. And you gotta call it what it is. The professional fees to the accountant aren't as high. The client's data isn't as strong. But the one thing the client has, which I always say, is the client always has a tolerance for risk. There is nobody who's an entrepreneur who's not a risk taker.
Hmm.
Doesn't mean tax has to be risky. That's what I'm talking about. I'm talking about you should be presented options that are passive and less than passive, but always defendable. Defendable means there's no risk of any significant penalties. Sometimes you're not given those options, and you have to make your accountant know when you want those options. What are my options here? Doesn't mean you'll always get them. So in that
Yes, I've
regard,
been trying to get my wardrobe paid for years, and everybody keeps telling me no.
it's a high risk. It's a high risk area. Yeah, you have to. I have clients who are actors, and we have a little more scope on grooming and clothing than we do in cases like yours. You can always take risk on and defend your accountants. Your accountant doesn't work for the tax authority; they work for you, but they have professional rules of conduct in the middle.
Right.
They can't associate with what they know is false or misleading. Accountants' personalities in there, their risk tolerance will create options, but generally speaking, higher fees create broader options. That's just a business reality. So small clients quite often are not given all the options. The options would include, how do I spread income across my family? How do I defer tax? Okay, everybody asks the standard things about deductions. Well, deductions was a cost incurred to run your business or not? That's not really a tough question in most cases. So tax planning is a dominant factor. And you say, well, that's an obvious discussion I should ask my accountant about. But I just had a client meeting this morning when they said that the client never was asked these questions before. I asked him 10 questions. I mean, nobody has asked me before. We're trying to optimize your tax year. That's why we're asking you this. We're trying to look at your family situation and business variables. It's like a sport for me to reduce your tax bill. And I don't treat it that way. I may not ask the question. So you would think it wouldn't have to be an obvious. If you're not getting asked about your family situation, and anything about your business model that help defer or reduce tax, then you should be asking the question. You shouldn't have to ask those ones, but it may come up. The other one that we focus on heavily is making sure that clients understand how, once their business generates after tax profit, so maximize profit, tax creates more after tax flow, how that capital is utilized to grow your net worth. Okay, and a lot of accountants won't comment in these areas because they're not well trained in them, they're not exposed to them. This is where experience and accountant who's not stuck at their desk adding up your numbers will have a broader scope than an accountant who is properly staffing their firm. So commentary on maximizing the rest of your financial life. Now, again, it's hard. We're busy. We have a lot of clients. Think of a doctor trying to be proactive with you. I know it's a hard thing. They can't call you every day and see how you're doing that day kind of approach, but you should be addressing your overall financial plan. It's not an investment advisor only role that you're talking about for financial planning. So that third area is, what else can I do in my financial life to optimize my accumulation of wealth, or tax, minimizing tax does part of that. The next side is optimizing my available capital. So there are tax efficient ways to invest capital. There are non-tax efficient ways to invest capital. There is nonsense ways to invest capital. There are sensible ways to invest capital. Our role is to at least coach clients through it. We don't decide for them.
Right. Give them options.
I can't tell you how many clients get coming to me every year who have not got their investment side of their life done in a basic ABC optimal manner. We're not talking about earth-shattering things here. Clients who have lots of cash in their company that should be in their tax-deferred retirement account. These things create, and I'll compound these issues for them. If you $5,000 or $10,000 of tax savings or other benefits for 20 or 30 years, that becomes $500,000 of retirement capital. It's like most things, over time it gets bigger. So I call this stuff slippage, and slippage is where between tax and utilization of capital, it's costing you money. Unfortunately, I'm sure the banking sector is one of the worst advisory services in this area, and they have a conflicting goal of maximizing profit off of you, which means maximizing use of your capital and somehow keeping you happy. So you got to push a lot of these different so-called advisors to get you the right answer. We're more independent. We're independent. We're also a little more broad-based. So I will tell my clients where to get the highest interest rates on their cash accounts. Make sure your cash is working for you. These are not hard things.
Right.
But a lot of them, we get client after client coming to us with holding cash balances that could be paying them interest. Investment capital is not being utilized. Of course, we get the other side, people doing really silly things with their money too. And so where our role is to be a bit of the coach there, intercept products that are very, very, very risky for you, and make sure capital is reasonably used. We're not talking about earth-shattering results here, but we're talking about things that I have case after case after case where there's a $10,000 or $20,000, $30,000 a year slippage issue for an entrepreneur. It's not like a lot in 1 year, but you do that 20 years in a row, and that's $1 million off your capital. For people who are extremely successful in business, all of these issues will be magnified. The tax planning will be magnified. We'll be getting into $50,000, $100,000 a year issues for optimization versus non-optimization. The investment side will be magnified. So for that person who doesn't have a lot of profitability, there still is some scope there. And I think a key point there is to make sure you're getting options. Now, sometimes you'll be roadblocked here. No, you can't do that. Well, you can do pretty well anything you want to do. The issue is the risk of doing it. Okay.
Right. Understanding the risk and understanding what, like you say, is it defendable, and understanding, I think understanding the options. If somebody's got profit in their business bank account and they want to know what they can do with it, well, you can just leave it there or you can do something with it, but you need to know what you can do with it.
I'm big on making sure clients know the cost of letting things just sit there
Right.
and force you to do anything with it. But we're practical. What we don't recommend are things that would ever expose clients' capital to.
Right.
You're simply making sure it's properly utilized. If you want to get into higher risk things, we'll comment to you on those things about, okay, what's the chance of that working out? What is the cost of that? So almost all losses on investing occur through high risk structures.
Yeah.
Without question. You want to have some fun with some money, take a little bit of money and play with it, but don't take your dominant capital that way. Just had a client call this morning, lost $1 million in cryptocurrency. Did they understand the risk of that? Maybe they should have put 1/10 of their capital there, not 100% of it there.
Right. Yeah.
We with this caution, we can't stop them.
Right.
Not against you doing high risk investing. It's just making sure you understand that in 9 times out of 10, it fails.
Right. So I have one more question for you, and
Sure.
then we're going to wrap up. And that is, what is the biggest mistake that you see business owners make when it comes to their accounting, when it comes to how they run their business financially? What's the one thing that you see over and over again that you're like, biggest mistake that they make?
It's a bit of a combination of two things. They ignore, I say ignore, 2 areas. One is using accounting data, which is it's not exciting stuff. We know that. Using accounting data to determine their business profitability and assess where their energy should be going, things like that. So I mean, it's not like common sense, but
Right.
they don't know that they're profitable. And the entrepreneurs make the common mistake over and over that if I'm busy, I must be successful kind of approach. So accounting data just tells you how success, if it's accurate data, if you are successful. I can give extreme examples of that where I've had clients come to me who were busy as can be and lost $1 million doing it. They had no idea that they were losing money beyond their cash flow suffering. So that one, you think, well, that one's not like going to occur. That it occurs more often than we would think it should. Within that is this pure issue of having accounting data to make decisions. How do you decide on staff salary increase without accounting data, knowing how profitable you are? The same element is providing for taxes. Okay, taxes should never be a surprise because taxes really are a grade 2 or grade 3 math issue. What is the average tax rate times your profit is your tax bill. And that surprise occurs so often in very, very intelligent people. And now I didn't think I'd owe so much tax. Well, you had the profit and providing for tax on profitability. When you earn $1, you don't have $1 to spend. That's a massive downfall with entrepreneurs across the board is, you have a gross paycheck to work with, not a net paycheck. And that gross payment, you're paid, your revenue plus possibly sales tax on top of that as your cash inflow, but it's not available to you. So accounting data is in the same issue. It lets you know that of your bank balance, how much is available to you. People are running their business off their bank account balance. It's a very poor way to run a business and a lot of mistakes. I get so many cases per year of entrepreneurs coming with tax. It's not a tax problem. It's a math problem. You earned $1 and spent $1.10.
Yeah, it's a cash flow issue.
You provide for tax when you earn $1. And successful entrepreneurs, unfortunately, no matter how good their accountant is, can face a 40% to 45% tax burden on their income. And that's getting good results. They can be over 50. Your accountant's job is to make it lower for you, but it can't make it disappear. And providing for tax, when I talk to my young entrepreneur clients, first thing I say to them about my meetings is make sure when you have a handle on tax owing, and you don't have to pay tax right away. So you got a little bit of flexibility in when it gets paid. So I will give my clients guidelines. You're going to bill $1, put aside 30 cents for tax. And at the end of the year, the worst you'll have to do is write that 30 cents back to the government, but don't spend it. And
Yeah.
so many clients coming to me who've spent it all. And so the business didn't fail. The personal budget, they earned $1 and spent $1.10. They way overspent relative to their earnings. Deal with a T4 job or a personal job, you're gonna have a financial problem. Business is no different. But the entrepreneur has so much scope. You're bringing in my business, I bring in $1 million a year of sales tax. If I didn't control that sales tax, I could have $1 million of cash to spend, and then at the end of the year, have a big problem.
Right.
How do you know these numbers? Well, counting data tells you. If you don't have any clue yourself of what your sales tax would be or income tax, you have dominantly sales tax and income tax in the business model. Your accountant's job is not to make tax go away. That's not their job. Okay, they're not a fraud competing type organization, right? That's not what good accountants do. Okay, you're not going to want to see you in jail for fraud. Okay, that's not the goal here. The goal is to optimize tax.
Mm-hmm.
Certainly pay the lower end of your fair share if you have a good accountant, the lower end of a fair share. Some of the clients want me to make it zero. That's just not going to happen here. And they're shocked that they owe tax when they have no money. Well, because you spent the tax dollars. That's not.
Mm-hmm. Well, that's the problem, because what happens is people get to the end of the year. So they get to December and they have money in their bank account. And so January, February, March comes along and they spend the money that they had back in December that probably would have paid the taxes. And so now when they find out they owe X amount in taxes, they're behind the 8 ball. I mean, that's one of the things that I've done for years is I always ask, in October, November, what is my approximate tax liability this year? If we finish the year at this ballpark, I know it's not precise, but ballpark, what should I expect that I'm going to owe in taxes so that I have 6 months to prepare to pay that bill and I don't have to worry about it. So
Options when you're in trouble, but when you've spent the money, it's really hard. So you have to. This again will be a dominant cost for a successful. It's the reality of it. And then, of course, getting into paying tax regularly solves a lot of that issue. Well, I don't know what my results will be is the answer. Well, again, that's where you've got, there's pluses and minuses being an entrepreneur. How do you pay? So we don't have the final result, but you got to make some reasonable estimates. Worst case, bank the money, and the next best scenario is to pay your government tax money. And don't expect your accountant to solve what is a grade 2 math problem where you've spent $1 when you earned 90 cents that year. That's not something anybody can solve for you. So we see that endlessly. I will say, Lisa, unfortunately, dominantly it's male entrepreneurs. Male entrepreneurs on average are less meticulous. They're more about growing their business than focus on anything. And so I hate to say that, but we have a 90% male entrepreneur problem that way. And
I see it with women too. I see it with women but what I see with women is often they learn the first time. So they make that mistake the first time and 1 year in their business, and then they learn from it and they don't make that mistake again because it feels really uncomfortable when it happens. It happened to me. I mean, I had the money, but I remember the 1 year I owed something like $40,000 and I think I had 60,000 in the bank. And it was a painful pill to swallow that I had to write a check for 2/3 of the money in my bank account. And that never happened again.
That's why I caution clients, even if a tax bill is the same, paying it in intervals will feel a lot better than paying it at once.
Yeah, absolutely.
Even you get into tax issues on unemployed and people who are employed. And the most common problem we'll see is people with multiple employers, right? So, or I'll have, for example, I'm a high-end doctor, for example, who happens to have to teach a course at the university, and the university pays them $12,000 to teach that course, and they took off $500 of tax.
Right.
Well, the doctor should know they're in a 50% tax bracket.
Right.
So $6,000. But how many of them are shocked by owing tax? Well, I always say that's not hard math. So whenever you're generating an income source, be aware of a reasonable tax obligation on that. So that's a phone call to me. Well, a client said, well, it's a call you could make to me. I've got this new income source. How much tax should I provide? We get that call a lot when people are selling a property.
Mm-hmm.
My house this year, how much tax should I put aside? That's the sensible call to make, right? So having a handle on your tax obligation is a really important part of being a business person, to avoid the surprises, to avoid overspending.
Mm-hmm.
Right? You wouldn't want to pay your rent or your employees once a year. Why would you pay your tax bill once a year kind of mentality?
Yeah.
I can. Well, actually, you can. Just so people should know too, there are both Canada and the US much higher costs not paying tax, regularly
Yeah.
high interest rates. So, but the entrepreneur is lacking complete information. I don't know how my year is going to go. How can I
Right.
do it?
Which
Well,
goes back to the accounting thing. If you do your bookkeeping, sorry, not accounting, if you do your bookkeeping monthly and you have a good idea of how you're doing, you should be able to project what you're
better,
going to owe.
you just don't know what the last few months of the year will hold. That's what we all
Yeah.
face.
Yeah.
So many pluses to being an entrepreneur, there are some minuses. And so you have to provide for reasonable numbers, and tax is a major part. We deal with that obviously on a daily basis. And how many clients we have who are surprised by their tax bill when it really wasn't that difficult an issue. You knew you were making money. You should. A lot of it is you can ask your accountant for the basic calculations. What's the corporate tax rate? What's the personal tax rate I'm facing? At least you can do your own grade 2 math, and that will help. But your accountant should always be able to run an estimate for you at any point in time. It's not hard estimate to give you an idea of where your tax. So if your data is not there, you won't have these numbers to determine how do I assess profitability. Of course, there are some funny tax rules in the middle that make it more complicated. Most of the tax rules are incentive rules, though, to lower your tax payable, not to increase it. So the result is usually better when the actual tax returns get done and the incentive rules are applied. So,
All right. So Steve, you could talk about taxes all day long, and we have to wrap up. So I'm going to stop you, and I'm going to thank you because you provided tremendous value, lots and lots of really, really great information for our listeners. I'm going to guess that everybody's going to walk away and call your office and want to work with you. And I know that, there's good and bad with that, because I know you're already a busy guy.
Entrepreneur always wants more work, but yeah, you have to.
Yeah. At the very minimum, everybody should be reconsidering how they've structured their bookkeeping and accounting, and whether or not they have the right advisory type relationship with their accountant. I think you can tell from the conversation that Steve and I have had here that he knows a lot about a lot of things related to accounting and tax and finance. And that's the kind of advisor you want in your court. And I can tell you, when we decided to move to Florida, I was, really grateful that I had Steve and I had his brilliant mind for advice, because he was able to guide us on a lot of the things that we did with our transition from Canada to the United States. And to his point, you can't put a price on good advice when you need it. So thank you so much, Steve.
Remember, taxes result in tax payable. It's a major impact on what it costs you in the end. But yeah, look for good suppliers, and it's a tough markup. But thank you for having me, Lisa. Been great talking to you.
Yes, thank you so much, Steve. And thank you all for listening.
Yeah, bye.